Now, with more analysts saying the effects of China's slowing economy could be more serious than originally thought, countries dependent on China are on high alert. Recent data projects that Korea will be the third hardest hit if demand from China continues to fall. Kwon Soa has the details.
China's imports fell 13.8% in August in dollar terms from the same month last year. That's a huge drop from July and a big difference from experts' expectations. China's exports also experienced a 5.5% drop last month. With China's trade figures continuing the downward trend, there are concerns that the already substantial impact on countries intimately tied to China could bring further dark clouds in their economic growth. China's imports were down 14.6% over the first 7 months of the year from the same period in the previous year. According to an analysis by The Guardian, if the level of decline stays the same for the rest of the year, New Zealand and Australia would be the countries hit the hardest, with their GDP expected to drop by 1.9% and 1.7% respectively. And Korea, which exports around a quarter of its outbound shipments to China, would be the third most affected country, with a 1% decline in its GDP and a loss of almost $13.9 billion in exports. Although China imports the largest amount of goods from Korea, the proportion dropped by almost 1% from January to July. Experts say Korea will have to defend itself from more risks from China with new policy measures, such as a cut to its key interest rate. Kwon Soa, Arirang News.